Welcome to MKE Forward, powered by Colliers. I'm Adam Connor, and today I'm joined with my partner, Tom Shepard. We're investment sales brokers at Colliers, and we are pleased to invite a good friend of ours, Andy Sinclair, to the podcast. Andy's been a good friend of mine and past co-worker years and years ago, and he now is one of the principals at Midlock Investment Partners. He's an alumni of Marquette University and enjoys some traveling, running, and cycling. And we'd like to introduce Andy Sinclair to the podcast.
Thanks for having me, guys.
Yeah, not a problem. I think some of the first things we want to get into is maybe just a little bit more about your background. I hit on it briefly, but we kind of want to hear where you came from and some of your personal background as well.
Yeah. Well, excited to be here. I'm a Milwaukee and Wisconsin guy, born and bred. Originally from Brookfield, went to Marquette, studied commercial real estate, and I really started in the business when I was 18, working for Adam. Adam, who's the MC here, actually was his intern way back in the day. So I've been working the business for quite some time, and I've done everything from leasing to the guy who puts signs in buildings. I've really started at the bottom, to investment sales out in California for a few years. And to fund management. So today I run a boutique investment fund based in Milwaukee and Minneapolis. So done it all, but still growing in the business.
Yeah, I think when Andy and I were working together, this was 2005, 2006, when you could pre-lease a Starbucks shopping center and sell it for 100% financed the next day. This is 2 years before the Great Recession. So it was
good days.
Yeah, it was the good days. Pretty crazy times. So obviously we want to talk about Midlock and how you guys have evolved and kind of what you guys do. That's a big part of, us learning about what Midlock's doing these days. Could you go in a little bit more detail on what you guys are working on?
Sure. So Midlock at its core is a boutique real estate investment firm. From the investor standpoint, we are a mutual fund of different buildings, and we pick which buildings to invest in. Our strategy, though, is a little more granular, is ultimately we do a real estate private equity strategy. And what that means, if we boil it down, is similar to venture capital. Instead of investing in a startup with an entrepreneur, we invest in a building with a real estate management or leasing team. They're in our business, they're known as operators. And that can range from people that are developers that are building a building to people that have a specialty in an area like parking or warehouse buildings or government credit. So Midlock acts as their stronger, institutional, bigger investor. And so that's what we do at the core. And ultimately, it's all about the real estate, though.
Andy, when we mention the term capital markets, it's kind of a big term in the industry. Can you break down where the capital is coming from, equity versus debt, and who your partners are?
Yeah. So capital markets, it is if you're not familiar with the term, it's an all-encompassing term that means real estate transactions. And obviously there's brokers that sell buildings similar to Adam and Tom, who I'm joined by. Then there's also buyers, investors, lenders. There's a lot of parts, everything that makes the real estate transaction tick. And so ultimately the capital markets is this all-encompassing term, and Midlock plays a role in that. Just as there are lenders that finance people and lend money to them, the building, Midlock plays an equivalent role with real estate operators and managers. We are the primary investor in those deals. So we play a vital role in the capital markets. And frankly, we play a role that's not very common in Wisconsin and less common nationally. It used to be the pension funds would play in our space, and they still are a very relevant source of capital in the capital markets, of equity, as it's called, the dollars that go into the building. But I will tell you that that's becoming less relevant for small to middle-sized buildings, which that's anything below $50 million, which I don't know about you, that's a pretty normal-sized building. I think it's not a high-rise.
Yeah, I mean, that would probably be 95% of the deals in the state of Wisconsin would be under 50 million. We probably only had a few this year that'll transact in the $100 million range. We'll have to move to New York City to get in the bigger boy playground. So one of the things I think we were excited about talking to you about today was you guys look at a lot of deals all over the country. You have a lot of assets here in Milwaukee, but we're always interested hearing is what are you seeing across the country when you go visit new deals? And I know there's other markets that you guys play in that are similar to Milwaukee. So I'm always interested to hear what you're seeing when you travel to, I don't know, whether it's Denver or Minneapolis or some of these other markets, what you see happening out there.
Yeah, I do think there's a lot of shifting going on, and Wisconsin has benefited from some of the trends. And, the old adages for retail or for clothes, it starts in the coast and then moves inland. My aunt from California has been telling me that for decades. But it's true for real estate too. And as you point out, Adam, Midlock, while we're Midwest based, the MID in Midlock stands for Midwest because we think it relays our ethics and who we are as people, hardworking, honest people. We also think that there are other good deals in other markets and trends that we need to capitalize on. And so, what we're seeing in the market overall is that pricing's been high, but there's still pockets of value where people aren't understanding stuff. I will tell you, every investor I talk to wants to invest in markets like Texas and Florida and Raleigh and Phoenix. Nothing wrong with those markets, very, very good markets. But the pricing also is sky high. Sometimes cap rates are as low as a 3%. So the lower the cap rate, the higher the price. That's pricing we don't see here in Wisconsin. And frankly, we're working on an apartment building where the cap rate's somewhere between a 5 and a 6. But yet the fundamentals are still pretty solid. What happens, though, is what we're seeing in the coast or even the Sunbelt markets as pricing has got competitive. We see institutional buyers or coastal buyers. They migrate to areas like Minneapolis and Milwaukee. So we try to be in front of them if we can and be able to sell the building to them the next time. But they are migrating to the Midwestern markets because they can't afford to pay what they used to be able to pay to get good value. And so ultimately, it's about returns for investors. But one last thing I would add, one of the reasons we like the Midwest long term is it's got great supply-demand balance, which means the developer is not putting the building up every week or in some cases every street corner. And so we think we can get really good fundamentals, but not have to pay sky-high valuations. And that's the benefit to being in markets like Kansas City, Minneapolis, Milwaukee, Denver in some cases. So
bringing it back home to our backyard, I'd be remiss if I didn't mention we had a closing with Midlock pre-COVID. I think we actually had a closing dinner at a farm-to-table restaurant. I want to say it was February of 2020.
Yep.
Hopefully we didn't pass any germs around the table at the closing dinner. Knowingly, right. So a month later, the world shuts down and everything, as they say, pivots and everything changes with the disruption of the pandemic. Talk to us a little bit about, some investments that Midlock has partnered with in our own backyard, downtown. You guys have bought some mixed use, some parking, office, retail. Talk a little bit about those assets and maybe what the strategy was before COVID, what it is now, and what the future looks like.
Yeah, no problem. And what I would add is, pre-COVID, it was funny. We started raising our fund in November of 2019, which only 90, 120 days before the world really changed. And so at that point, the story was a recession's coming, kind of like Game of Thrones. Winter's coming, but you didn't know when it was coming. Well, it was already there in November of 19. We just didn't know it had hit the U.S. already. And so it was interesting. So that was a big thing with investors is how do you plan for what's inevitably the next downturn? And you're always looking back at that point to the Great Recession, which I know, Adam, we participated in together. And how does it compare to COVID-19? And so, one thing with investors, the focus is on price per foot, price per pound, cash flow, as well as, where do you find value and how do you have 2 or 3 ways to make money other than relying solely on the building's fundamentals. Right. And so those were all conversations we had pre-COVID. Now, when COVID hit, all those things still rang true, but it also became, well, what's discounted? What can we find a COVID-19 discount? And all these massive funds besides Midlock, sponsored by Blackstone or KKR, they said, we're going to raise these massive distressed funds. Well, Midlock had been a value fund and a discount-oriented fund already. And so we were actually able during COVID to buy a couple discounted deals. I'll give you an example. There was a deal in Overland Park, which is part of Kansas City. It's a very affluent community in Kansas City. We were had an LOI agreed to buy an apartment building for about $26 million, which we thought was a discount already. But when COVID hit, we said the price isn't 26. We can't afford to pay that anymore. It's 25. Now, 26 was still a great price, and we would have been happy to have owned it there. But you have to be prevalent that the market's changing and where it's going. And so we were able to negotiate a further discount. Midlock also in Minneapolis was able to participate in a distressed loan investment where we bought a loan at heavy discount to essentially its loan value. And those type of things happen with COVID. I will say what you've seen nationally, though, is the Federal Reserve and the U.S. government has pumped so much liquidity in the market. So while COVID had about 6 months to a year of discounts, those are largely gone, though we are closing on a few of them that are just not quite done through the pipeline. So they're still out there. Post-COVID, though, it's going to go back to what it was pre-COVID, which is how do you find value? How do you find cash flow? How do you grow the value of those? But I wish the discounts would stay a little bit longer, Tom.
Yeah, definitely. I think everybody, a lot of our clients were calling me April or May 1st saying, what deals can I go out and buy? But the reality is a lot of those owners and sellers weren't in a position to sell.
Right.
The banks weren't knocking on their door saying, hey, you got to sell now. Or, the banks weren't over leveraged that, they had to get all these assets off their balance sheet. And it's interesting that you brought up, the big funds of the world, Blackstone and everyone else who raised these giant either debt funds or equity funds to go out and buy distressed real estate, when reality is there isn't much distressed real estate to purchase right now. There's some hotel deals, there's some retail deals out there, but we just haven't seen the massive amounts that we saw post-recession. Are you seeing the same thing as far as distressed assets?
I would agree. And it's actually a couple trends that I'd like to get your opinion on. But I would say that the discounts were last May to last August primarily. And, Midlock had its hands in a handful of foreclosures or heavily discounted deals that were maybe not distressed, but the owner needed liquidity, not, because of COVID. There's still some assets out there that haven't quite fully recovered. Hotels you brought up, I think, is an interesting asset class that if you have the chops or the ability to convert it to another use like apartments, where I still think you could find some value. And it's something Midlock's exploring and working on in that regards. But I do think, though, if you go back to what's happened in a post-COVID world, it's really shifted. And we've seen a lot of institutional investors go, okay, well, we did the distressed thing for a year, back to the pre-COVID strategy, which is cash flow, value, growth. Going back to what you see in the stock market, heavy growth investors, which is e-commerce, industrial, apartments in growth areas. And so I'm not sure what you guys see on the investment sales side, but it feels like everywhere I look, another person's buying a warehouse Amazon facility at record high or record low cap rates, I should say.
Yeah, and on industrial, I'll speak to that. The Amazon impact is profound, and it's putting downward pressure on cap rates, upward pressure on lease rates. They're also hoarding materials, steel in particular. So steel's pricing spiked, and that's really impacting the residual value on real estate. And it's really just a function of we have no shortage of buyers right now in industrial. Any deal that goes to market is likely to have 10 to 15 bids placed. And the cap rates right now continue to compress, and record pricing is being set seemingly every quarter. So
no COVID-19 discount, right, Tom?
Absolutely no COVID-19 discount in industrial right now. I handle the office sector as well for our firm on the capital markets, and it's quite frankly a little bit of the opposite. I've never seen such a gap between capitalization rates in industrial and office. Right now, it's the ultimate buyer's market for office, and if you're willing to take on the risk-adjusted, the risk, the adjusted returns are there. It's an attractive market to buy. There was a deal that was just traded in downtown Milwaukee. It was a New York seller and I'll call it an opportunistic New York buyer that transacted on a Class AB office property that was stabilized at a double-digit 10% cap rate. So there's value right now in office. I think Adam can speak to net leased and retail, and quite frankly, there's value in retail as well.
Yeah, the net lease market, your Walgreens or your single-tenant grocery stores are continuing to set records as far as cap rates and pricing. But on the retail shopping center side, we're seeing the same thing that office is seeing. Multi-tenant office is seeing, double-digit cap rates. But a lot of these tenants, I get to see the store sales of, Dunham's and Office Max and Joann Fabrics and some of these other retailers that are in these shopping centers. Their numbers the last 12 months have beaten all the previous 12 months that they...
Everyone needs a hobby.
Correct. Everyone needs a hobby. All the shoppers are back, which is, I found very, very interesting. When Office Max, Joann Fabrics, and Dunham store sales are through the roof where they were even 12 months previous, it shows resiliency in the market, and it shows why new buyers are getting into the retail space. Now, I'm not trying to clump all of retail into one basket, because the larger malls and the class A or class B malls are going to continue to struggle because of COVID and the pandemic. But some of these other shopping centers, I think you're going to see a lot more buyers interested, as you mentioned, Tom, on the multi-tenant office side.
I think what's interesting is you're kind of showing the point, and I think it was the pre-COVID and during COVID, now post-COVID strategy. During COVID, everyone trying to find discounts, and they were there for a little bit, and it remains a discount or more volatility, as you're pointing out, Tom, and I see that as well. But post-COVID, it's either deep discounts for office or the redhead stepchild of retail, multi-tenant retail, or it's the darlings like net lease and apartments and e-commerce warehouse, or even Class B warehouse. And so I definitely see those trends, and that's prevalent in the investor side. It's where do you put your money, and are you ready to go after those discounts that are available post-COVID, or do you want to go something a little safer, more of a bond alternative, I would say. And don't undersell what's happening in the bond market, of why you're seeing people have record pricing, like you were saying, Adam.
Right. Yeah. All these funds have now, their cost of capital is an all-time low. So they can buy in the 4 and 5 caps, and they continue to get more and more aggressive, which we've never seen before. And Tom can talk to this a little bit, but I've seen now REITs and funds that were never in the net lease space are now in the net lease space, buying up as much single tenant grocery, Walgreens, and all these assets that they had forgotten about for the last 5-6 years. They're all now back. And I think it's a bigger portion because they can't find anything else to buy either.
On industrial, we see, quite frankly, buyers that are green to the industrial world coming into the market because it's in favor right now, when cap rates are compressing and tucking inside of 3 in Southern California for core industrial, and right inside 4.25 in Chicago. All of a sudden, that 6% cap rate in Southeast Wisconsin looks extremely attractive. So new investors, these new offers that are coming in are from buyers, quite frankly, that aren't household names to us brokers in Southeast Wisconsin, because it's new money, it's new capital flowing in.
And with new business strategies, I find too, in Minneapolis, we're actually closing on a warehouse building, and it's in a submarket I've bought from Colliers before, actually. Colliers involved in this transaction as well. What's interesting, though, is because Blackstone's come in and bought $1 billion worth of real estate, especially of industrial in Minneapolis. And this would apply to Milwaukee, too. They've been pushing rents. They're taking their coastal strategy of saying, well, rents don't have to be $4 anymore for a warehouse. Now it's $5. We own so much of the market, we're going to push rents. Well, that flows down to the small landlord too, someone like Midlock, who's a boutique size. And we're benefiting from when they come into markets like Milwaukee and Minneapolis, because the rent's higher, which means we get to sell it for more eventually. And so there are good things that the large groups can bring from the coast into more local Midwestern markets. Maybe not always great for the tenant's rental rate, but that's definitely a trend we're going to keep on seeing.
Let's change and pivot here a little bit and talk about potential black swan events. All the buzz right now is surrounding tax reform. And this week, all eyes seem to be glued on President Biden's first congressional happening actually tonight. We've got a rising interest rate environment. I think 10-year treasuries are up 60 to 100 basis points since the start of the year. We have obviously tax reform. We have material pricing being way up. What other things are out there? Any commentary that you have as you're evaluating and underwriting deals that you're baking into your pricing and your modeling that is involved in those categories, or others that we're not talking about?
Well, this was the first time I had a plan for a pandemic, so it's kind of like the whole 100-year flood. For pre-COVID, a lot of it was we were focused on what was happening over in China, and that's come back to the forefront a little bit, both with both administrations. So I still think you're going to see some commodity problems. If I look out, it's hard to predict the long run in black swan events. I do think you're going to see a larger emphasis on small swan today, which would be commodity prices. And one thing we're not talking enough about is how the manufacturers cannot get the raw materials to make anything. I heard a story about Yeti the other day. They can't get one small part in their supply chain to make their coolers. Well, and if you can't get that one little small part, you can't sell a cooler for $300. And what does that mean for pricing for every little input cost? And so I do think you're going to look at inflation, and the Federal Reserve, who controls mostly what goes on in interest rates in this country, is going to have some tough choices because we might see inflation at levels we haven't seen since the 70s and 80s. There's always the external event, though, Tom, that we could be worried about, like a war or a political event that we're not even talking about today. And then that could spike interest rates in a way you got to be prepared for. I will tell you at Midlock, a couple lessons we learned coming out of COVID that you always talk about, but then you make an effort to double down when it happens. We actually write down lessons, my partner Josh and I, things you learn. It's always having more cash than you need. It's always trying to find the right lender for every project. These are things that people say, but then they don't always do that, and it's other things like, do you have the right people in place? So if a black swan does hit, do you have the right people to execute your strategy? Everything down to leasing, down to the maintenance guy. And I think that's not appreciated enough in the financial part of real estate, that the people are actually what make it work and get you through a black swan event.
How about the flip side? Any areas of growth or excitement or revitalization here in Southeast Wisconsin that you see as, without unlocking any Midlock secrets, would you any insights you share on kind of sectors to watch or parts of town to watch?
Yeah, I think downtown was kind of left for dead, I think, over last summer. Quick plug, we're an investor in the Avenue. Without giving too much away there, I think that's seen a nice renaissance in terms of people coming back to downtown and being interested, not just in that project, but across the street with like Milwaukee Tool. So I think office and apartments in downtown Milwaukee are going to, while they had a little bit of interruption, are going to have a positive, essentially second half per se, to what looked like it could have been a long-term trend going towards suburban office. So I think people are going to come back. I think other things, though, too, is I think we're going to see ongoing trends, as Adam's point out, that retail's not totally dead. I will admit I've not bought any retail in the last 24 months, but I do think that's a trend in southeastern Wisconsin, is that while industrial and office and apartments get all the headlines, I don't think retail's down for the count in our market. I think you're going to see quality retail still survive.
Yeah, I'm waiting on the next big new development of retail. I think you pointed out the commodity prices are probably going to hurt a lot of that new construction. Are you seeing that when you've gone into some of those markets where you guys are buying existing product where, it's just tough to build new construction now?
It certainly helps the existing building you're buying, right? It gives you, real estate's about supply and demand. Economics kind of 101. If someone builds a new building, you have to worry, well, how does that trickle down? Whether it be a Class A building or not, it's really hard to build a B building, which is what Midlock primarily invests in. But sure, yeah, you're absolutely always worried about supply. And if input costs go up, now the one caveat I would give you, though, is developers are wired to build. So even though input costs may go up, they're still going to try to figure out a way to work it anyway. And sometimes that, right or wrong, they build even though they shouldn't. And so it's always something I worry about.
We always like to chat about, places of interest, places you like to have fun. I guess we've all been, holed up in our COVID hideouts over the last 12 months. As you look forward into the summer, and, great time to be in Milwaukee, live in Milwaukee in the summer months. Today it was announced that State Fair is going forward. Looks like Summerfest is going to happen in September. Any thoughts on what concert, what event, what festival that's on Andy Sinclair's list?
Well, Summerfest is going to happen my wedding weekend. I've been accidentally engaged one time engaged. My date has changed 2 times. I want to clarify for my one fiance.
Yeah.
And, so our hotel rates are through the roof Summerfest weekend. But you know what? As someone who owns an asset next to the Fiserv Forum that actually I worked on with Adam and Tom, I'm excited to see people come back. And so I think the first big concert that happens at the Fiserv, and later in the summer, kind of support our local asset, I'll be there. I don't know who's going to play yet. I know they're still trying to figure out schedules and stuff. More importantly, I hope it's a NBA championship run for the Milwaukee Bucks. I'd love to be there now that people are vaccinated and back in the stands. And that's the biggest thing on my local radar, other than Summerfest happening over my wedding weekend in Milwaukee.
Tom? I was going to say, Adam, and anything on your list? You're a big golfer. Is obviously Ryder Cup coming this coming back this summer?
Yeah, I think everyone's excited. We've all been cooped up for 12 months. My family, my wife and my daughter, we went to the Brewers game last night, and we had just a wonderful time. It was fantastic. We were so excited to get back out there and be out there with people and see a sporting event, and it's just kind of a feel good. And now that spring and summer are there, we're excited to do more of it. Milwaukee summer is back, so hopefully it continues.
What about you, Tom? Where are you headed off to?
Yeah, same. Brewers, I went to opening day. It was fantastic. Actually booked tickets for this Sunday versus the Dodgers. As soon as the email came through last week, Dave Matthews went on sale. I booked tickets for Summerfest Dave Matthews. So Ryder Cup, very tough ticket to get. Still trying to find one if anybody out there has one.
Yeah, there's your plug. There's your plug.
A note for anyone thinking about summer vacation. I did book my bachelor party, and The Real Deal actually ran an article that 90% of all Airbnbs for the summer have been booked.
Oh my God.
Because people are so cooped up. They've planned out their summer vacations 2 months early. So I paid a little extra for my Airbnb, but just to note, if you're going to travel in Wisconsin or elsewhere, you might want to book.
There you go. Consumer spending's up, leisure travel's up, maybe, bounce back in rents and cap rates for hospitality and retail.
Yeah, I think we're all very excited. We want to thank Andy. I want to thank Tom, but we really appreciate you coming on and sharing with us everything that Midlock's doing and what you guys are looking forward to, and hopefully some many more deals and some Brewer games.
Yeah, thanks for having me, guys.
Hello, MKE Forward listeners. I'm David Boehm, inviting you to check out the Milwaukee Business Journal podcast. Every week, we inform, educate, and connect smart, hardworking business people by sharing the latest business news in southeastern Wisconsin directly from MBJ reporters. You'll hear exclusive newsmaker interviews, gain insight into our cover stories, and learn about MBJ award events and nominations. The Milwaukee Business Journal podcast. Connect with us every Friday. Find it everywhere you get your podcasts.